Hello and welcome to the European Pen Briefing for Friday, March the 1st. This is Marios Hadjikyriakos, investment analyst at XM, and we're going to be looking at the latest developments in the financial markets today. Let's start with the US dollar, which was the main winner among the G10 currencies on Thursday, behind the Swiss franc, drawing support from stronger than expected US GDP data. US economic growth clocked in at 2.6% annually in quarter 4, overcoming the forecast for a more severe slowdown to 2.3% and easing some concerns about the health of the US economy. So the dollar rose as investors scaled back some of their bets that the Fed will cut rates this year. Interestingly though, US stocks closed lower despite this strong data, as the decreasing probability for Fed rate cuts this year limited the appeal of riskier assets. As for today, there are several important releases on the economic calendar that could drive both the dollar and US equities, with the most crucial one being the ISM Manufacturing Index for February. In the broader market, Asian stocks are mostly higher on Friday after China's Caixin Manufacturing PMI for February rose by more than expected, calming some nerves around a prolonged slowdown in the world's second largest economy. As a result, the safe haven Japanese yen is the worst performing major currency today, falling to 2-month lows against both the dollar and the euro. Looking forward, the outlook for the yen remains bleak, considering that Japanese economic data have been losing steam lately, generating fears that the economy could slip into a recession this year. Given this data weakness, any policy normalization by the Bank of Japan probably remains a long way off, which suggests no support for the yen from monetary policy. As for the rest of today's highlights, besides the US data, we will also get preliminary inflation data out of the Eurozone, the UK's manufacturing PMI for February, and Canadian GDP data. Markets could focus mainly on the euro area's inflation figures, as this will be the last major data set before the ECB's policy meeting next week. Given that the bloc's composite PMI for the same month showed that prices charged by firms rose at the slowest pace in 18 months, there is a risk of a negative surprise in this CPI data today, which could weigh on the euro. So that's it from me. Thank you very much for watching and have a great day.